Hello folks, LA Little here with TA Today, bringing you neoclassical technical analysis on a regular basis, giving you trading ideas, setups, and thoughts about where this market is and where it's going. Let's get into it. Hey folks, welcome to the show. I wanted to just talk about money management and the way these markets are trading. Markets are either going up, they're going down, or they're going sideways. And sideways is chop. And chop is hard to make money in because you get chopped up, right? That's why they call it chop. If you look at these markets, they're sideways. I mean, you could argue here that the S&P is heading up, but truly it's just in a range. If you look at it, right, I mean, this thing has been in a range, still is in a range. Until it breaks out of the range, it's just chopping. It's up and down, up and down. You can see the up and down, throughout here, right? You've got even more so, if I look at the index, you've got even more so chop, right, that's taking place. And that's because the index has the chips in it, and the chips are trading tough. Talking about the chips, tomorrow is ASML. They're going to report. They're doing a bearish retest regen. We'll see if they close above it today. If they don't, then I would say the indication for that earnings in the morning is to the downside. So, watch that if you're interested in that. If we look at oil, oil's chopping. It's going back up doing bearish retest regens. It may get higher, right? It just got into this bearish retest regen. This falls off the chart tomorrow, so this will be the dominant one at that point on this time frame. Although you still have that weekly here, but that weekly is a very wide price spread bar, so it's kind of hard to use. You got a little gap in here. So I would think this, this 84, 87 is about as high as this can go. That will put more pressure on the market if that happens, but still, we're way down from the 120 that got recorded, several months back, not that many, 3-4 months back. If you just keep going down the list, chop. Everywhere's chop. Here's gold. Gold tries to break down on the weekly. This is the bullish retest regen. It's down here. It's testing. It's testing. It's testing. It's chopping right at the bottom. This is a bearish retest regen. It's already been tested multiple times. This could finally give way and give you a nice pop to the upside. So, gold is still chopped, but it's starting to be a little bit more positive. IBM came out with earnings, got hammered, right? They said that there's not enough money to go around. It's a choice between, do you spend it on the data centers or do you spend it on the chips? And right now people are spending it on the chips. Mags, it's chop. It's a lot of chop. It's doing the positive stuff in that this was a bullish breakout, right? That was here on this bar. And then it popped up, made it up to, I'll blow these things up so you can see them better. It popped up, made it up to the next breakout, right? Now it comes back and does a test. That's what it's supposed to. It can get as deep as 2/3, which would be down in here, right? And then it's going to try and push back up to the next bearish, but it's still a big range, right? You just have to realize these things are ranges. Okay, so talking about ranges, how do you make money in ranges? First off, you don't leverage. You keep your position size so that when it chops, you don't get chopped up. In other words, you don't sell down here and watch it go back up here, right? You're trying to measure, in this particular case, if I'm trading this, what am I doing? I'm looking for this retest to get deep enough, maybe the top of this, maybe a little bit deeper, like I said, down into this area. And so maybe I buy a little bit in here if I can, and I buy more there if it's still behaving. My stops are going to be down below all of this. And what I'm doing is I'm averaging in somewhere down here, right? Maybe I put 1/3 on here and, 1/3 there and the rest of it here. And if it behaves, right? In other words, I don't come down with huge volume, things like that. And in that particular case, I'm looking for this thing to turn and do what it's supposed to do, which is to get up into here, which is where I want to sell. So you just use the volatility to your advantage, and the only way you can do that is don't get chopped up by it. When the market's in a bull trend, it's different. You just buy it and you buy the dips. Here you have to buy and sell. You can't just hold. If you hold, you're just going to watch your portfolio goes up and down, right? So that was basically what I would bring to you this morning. I think the markets are still sideways ranges. They're still tradable, actually nicely tradable, but you can't leverage if you're going to trade. Don't leverage, folks. It'll get you in trouble. Have yourself a great one. I'll see you next time.